Okay, hello everyone. Welcome back to Morning Kappa. Okay, so if you look at the S&P 500, well, it drifted lower on a Monday session as tech stock came under pressure once again, with extending uh, last week's losses on fears that AI spending is outpacing the returns, right? So well, we believe that the broader market was in a holding pattern right now ahead of today's data releases, where the delayed November uh, job report and also retail sales figure will finally confirm if the Fed recent rate cut was justified, right? And also, there's a company here which is Service Now. I think it's a AI company, right? Was the biggest losers yesterday, plunging over um, 11-12% on M&A story, right? Also further dampening the sentiment in the software space. So right now, do expect heightened volatility today as the delayed job reports are expected. And if the unemployment rate ticks higher, as feared, the rotation out of high tech into defensive value will likely accelerate, right? So at this juncture, um, we might see the US index to resort to consolidation uh, above the 6,800 point level in the coming session uh, ahead, right? So, looking at the US trading stocks that we have published yesterday, um, we got new one, NEM, right? So the stock has a breakout above the 95 US dollar level. Now we can expect that the stock to travel towards the 105, 105 on a strong momentum, followed by the next resistance at 115 dollar level. Now if we counter to reverse, please do watch out for the 89 support level for the immediate uh, I mean it $89 for the immediate support, as it could indicate initial trend reversal. Also, next we got EcoStar SATS. So looking at the charts here, the counter has charted high market structure here, and it is well above the moving average, trending well above the moving average, right? Eyeing to reach higher at $115 dollar level. So if the stock to climb up higher, we could see that it might travel towards the $130 level. Now if the stocks slide lower below the 89 level, this might signal a shift to a bearish structure. Right, so for the China A50 futures, right, trended lower on Monday on yesterday's session, right, after the retail sales grew only um, over 1%, right, signaling that the consumer confidence remained shattered. So I think um, selling pressure was amplified by uh, slump in the tech sector as well, tracking the Wall Street recent weakness, and also fresh trouble in the property sector after the failing to secure the bond extension vote, right? So expect the market to remain defensive in the short term as the um, weak uh, data currently overweight the policy promises, and also investors will likely to sell into rallies until concrete fiscal stimulus measure are officially rolled out. So, if you look at the charts right now, yes, the overall are still bullish, right? However, following the rejection from the downtrend line recently, together with the cross below the 50-day lines, I think we might see that the A50 futures will likely to remain in its consolidation uh, um, formation or state, right? And the market are getting weaker. Uh, well, 14,700 is seen as strong support to provide a rebound right now. Okay, so Yeah, if you look at the WTI futures, the WTI crude dropped yesterday to a low of around 56.6 dollar on Monday, which also dragged down by the China's weak economy data, which amplified fears that the world's largest importer is slowing down just as global supply peaks, right? So um the I would say the the bearish sentiment was reinforced by progress in Ukraine peace talk, which traders view as a signal that Russian supply risks are fading, causing the market to ignore the supportive headlines over the recent few weeks. Like, if you can recall, the US and also the Venezuela tension, and also there's this story of tanker seizure by Iran. So yeah, I think the market is in sell it in the rally mode as the oversupply and versus weak demand narrative um getting stronger or dominates, right? So I expect the price to test the 56 psychological support, and if that level breaks, we could see that the future price to flush towards the 55 dollar level. Right. So looking at our Malaysia market, right? So the KLCI climb yesterday lifted by the window dressing in heavyweight like the financials, um Maybank, Public Bank, right? Which much broader weakness. So I think in contrast, FKLI futures dipped slightly as traders discounted the late spot rally, remaining bearish due to weak China economy data and also the market, poor market breadth, signaling skepticism that the index gains are sustainable without broader participation. So I expect this divergence, which shows FKLI to go up, um, F, sorry, KLCI to go up, FKLI to to um uh, remain sideways, to continue. I think the KLCI index will likely to drift higher towards the 1,005 on year end in C support, right? While the futures may remain volatile, lagging until broader market sentiment improve. Right. So yeah, also if you can look at the small cap index charts here, I believe the index are resorting to a sideways at this juncture and at least throughout December this year. And if you follow our morning kappa yesterday, right? We have a small cap report from our analyst Meng Hong. I think he believed that the valuation right now is just, the valuation is okay, and the uh, growth expectation are compelling, right? So valuation are trading below the 10-year uh, median. So I think by referring to the chart, I think we can see that the small cap to move or to rebound higher on the back of better valuation together with some of the catalysts to the this small cap index, including cyclical recovery and also sector rotation. Also, if you refer to the report, right, I believe I just would like to share again. So there's this topic table for the small cap index. And so this is our watch list for today. Highlighted a few names like YTL, IGP, Uzma, and some consumer names, 99. We have telco names as well. And looking at the Malaysia trading stocks, we got here Maxis today. So the stock has breakout above this 3.90 level. I'm sorry, 3.90 level on a strong volume. So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 4.10 followed by 4.25 level. So if the stock to clear this 3.75 support, this could shift to a bearish structure. Also, next we got YTL Power International, right? So the stock also experiencing a breakout well above the string at 30 cent level. So if the stock to remain bullish, we expect the price to reach even higher at 3.50, together with the second resistance at 3.70 level. So keep an eye at the 3.10 level for any attempt of reversal. So today we got two breakout stocks, which is Maxis and also YTL Power International. All right, so lastly for the FCPO, well, it trended lower, even lower yesterday as the data reported that export for the first half of December fell, confirming that the demand remains um, sluggish despite the lower prices. I think sentiment was further supported by the uh, weak economic data, which also triggered sell-off in the rival exchange commodity market that dragged our local futures down together with it, right? So I think the market is struggling to find a bottom because the massive stockpile as well. So we hold our downward bias unchanged, and now the market are looking at the 4,000 uh, ringgit level. So if they sell down to further strengthen, I would say 3,900 would be the next key level. Right. So I'll stop here and pass the floor to Queenie. And thanks everyone, and happy to see you again.
Okay, thank you, Aiman. Okay, let me just share my screen first. Morning, everyone. So today we have a new trading idea report on a company called Gagasan Nadi Cergas Berhad. So Gagasan Nadi Cergas has a four-pronged spectrum of businesses, which are firstly construction, which takes up about 34% of their FY24 revenue, and then property development, 56% of FY24 revenue, concession and facility management, 6% of FY24 revenue, utility services, 4% of FY24 revenue. So the last two actually is their recurring income, as they have this IUM in Kuantan and UTM in Malacca until 2034 and 2037 respectively. Okay, and that's the breakdown for revenue. But however, you may look at this picture here, this figure here, and you can see that construction takes up about the construction subsidiary is about 100% for the group, and then concession and facility management is about is also 100%. But then for property is about 70%. So although property in terms of revenue it takes up quite a lot, but when it comes to bottom line, it only takes about 25%. And of course, yeah, that's what I want to say. So for this company, bottom line wise, 50% will come from the recurring income, which is both facility management and concession, as well as the others. And then 25% come from property development, and then another 25% come from construction. Okay. Okay, so the investment thesis for this company will be turned around from both its property development arms as well as the construction arms. So it was loss making in back in FY23, and then it was only turning profitable in FY24. And going forward, 2025, it will be even bigger. So property development turnaround becomes its key earnings driver from FY25 onwards, as it rolls out over 7,500 rumah idaman units across Kuasa Damansara and City of Elmina with a combined GDV of 3.2 billion. Kuasa Damansara Phase 1 has achieved a 81% take-up rate within 2 years. It was launching early last year, supported by strong first-time home buyer demand. Meanwhile, the group's 173 acres of development rights land bank provides sustained launch visibility going forward. Kuasa Damansara Phase 2, which is of the size of more than 2 times the size of Phase 1, will launch in first Q26 and is expected to mirror Phase 1's strong take-up rate. So 2 Elmina projects total GDV of 414 million will also launch in first Q26, with Elmina 5 to be immediately acquired by Selangor's House and Real Estate Board, or LPHS, enabling revenue recognition to start in first Q25, meaning in first Q25 we expect is Elmina 5 to have a take-up rate of 100%, because if you look back the announcement, okay, they mentioned that this will be acquired 100% by LPSH. Okay, so there is also a strong construction backlog. As of third Q25, Gagasan Nadi Cergas Berhad commands a 221 external order book alongside an in-house mandate to build 15,000 affordable housing units, which from its GDV of 3.8 billion over 8 years. This brings its total order book to 32 times of its FY24 construction revenue, underpinning strong earnings visibility and a sustained project pipeline. Its in-house construction arm will also help the group, in our view, capture end-to-end project development value by optimizing cost efficiency. Okay, and one thing important for the company will be 50% profit. 50% of their profit is from recurring concession income. Okay, so although in revenue level you don't see much of the concession income, the recurring income, because you will see in the asset portion, the balance sheet asset portion, where finance lease asset and finance lease liabilities will slowly decreasing. That's actually the contract value. Okay, when they recognize, this value will slowly decrease, and then they will capture the finance income at the revenue level, and then also there is some profit before tax number inside other income for the company. So when it comes to profit, it takes up a lot because they own they own a lot of these subsidiaries. Unlike property, they own about 51% only. Okay. So Gagasan Nadi Cergas hosts 2 20-year student hostel concessions, namely International Islamic University Malaysia, IIUM in Kuantan, until 2034, which right now have about 250 million receivables, as shown in its balance sheet. And University Technical Malaysia Melaka, UTEM, until 2037, which is about 300 million receivables, as well as a 30-year concession of Datun Jelating Mall until 2051, which covers chill water and electricity distribution. The proposed 186 million acquisitions of Consortium PAE Sepakat Sdn Berhad KPSSB could further strengthen recurring income, in our view, adding 155 million in receivables and a potential bargain purchase gain through 2036. Okay. So in terms of valuation, based on an ascribed PE of 11.5 times on FY26 F earnings, we derive a fair value of 53 cents. So the valuation is in line with the 1.5 times standard deviation discount of the KL construction index, because this company is classified under construction, the construction sector in Bursa, Malaysia. So the discount is the discount of 1.5 times standard deviation is because of its smaller market cap. Yeah. So key risks for the forecast as well as the profit forecast as well as hence the fair value will be slower than expected property take-up rate, fluctuations in building material prices, and economic risk. Okay. So all in all, the company stands to benefit from its highly sought-after Rumah Idaman projects, which is about 173-acre land bank supporting 8 years of sustained development and construction activity. Recurring income should rise further with the expected acquisition of additional facility management concession for hostels accommodating 10,000 students across 7 campuses, with a clear turnaround, rising recurring profit contribution of 50%, and net cash balance sheet. Its 9 times FY26 FPE appears attractive versus the 14.5 times 5-year sector average, which is Bursa Malaysia Construction Index. Okay, that's all from me. I would like to stop here for today. Thank you everyone for dialing in for today's morning kappa session. Hope to see you guys again tomorrow. Thank you.